Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Tuesday, second day of October 2018, and this is the Daily Report for Gold and Silver. We have the majority of the precious metals complex trading sharply higher today, with palladium being the only one of the precious metals trading lower on the day. Gold closing up about $15.60. It's a net gain of 1 1/3%, well over 1,200 at 1207.30. That did affect us, of course. We had a stop at 1202.17. We'll discuss that in detail as we pull up our technical studies. Silver gaining almost 1.5% on the day, closing at 1474. Platinum gaining about 0.75%, closing at $833. And then lastly, palladium trading lower by about $12 at 1,044. Now, one of the most impressive parts of today's rally is it rallied in light of dollar strength taking away from its value. So it not only overcame dollar strength, which was moderate, but it also had a lot of buying in the market. My sense is that it was short covering that created the greatest surge to the upside in the precious metals complex. The Dow Jones Industrial Average did close at a new all-time record high, gaining 122 points on the day, closing at 26,733. The Standard & Poor's closed in essence unchanged at 2923. And then lastly, the NASDAQ Composite lost about 0.5% in trading today, closing back below 8,000 at 79.9852. Traders, while today's move was significant, it was substantial, as gold is now trading back above $1,200 per ounce. It is going to take more than a one-day move for me to see some technical evidence that, in fact, the long-standing correction has concluded and we're moving back into rally mode. Right now, we are back within the range that really marked gold's trading for about a month, as it traded between lows that were found at approximately 1190. And in terms of the upside, that had been firmly entrenched at a major resistance area of $1,218 to $1,220 per ounce. So we are now once again back within this defined range. We know that the market broke just a little bit to the downside, but now has moved right back into this area. That affected us in that we went short at 1199.40. We were stopped out at 1202.17, and so we've got about a $2 and change loss on the trade. I am sorry to report that, but we never had the market really break hard to the downside, and in fact is now back to trading sideways unless it breaks above two critical components. The first key component we are right at, and that is our 50-day moving average. 50-day moving average currently is sitting just above current market pricing. Current market pricing is at 1207.30. We are right at the 50-day moving average, which I believe is at 1207.70, so slightly higher than current pricing. However, the real key, as far as I'm concerned, is whether or not gold prices can break and then trade on a closing basis above this key area at 1218, because that's the area that gold has faltered at time and time again over the last couple of trading weeks. Lastly, assuming that we do see gold pricing not only find some real support just above $1,200, but actually begin to trade above the 50-day moving average and even closing above this current level of resistance at 1218, what that would indicate to me is that the interim term or short-term trend has turned from bearish to bullish. However, take a look at where our 200-day moving average is at, and that is at 1283. So we are still quite some distance away from being able to say on a technical basis that we are no longer in a bear market. And traders, we do have some similarities with gold and silver in that both markets had dramatically higher closes today, but both markets are trading just below the 50-day moving average. You can see that as this black line here. However, as far as silver is concerned, we are seeing quite a difference in terms of how it has formed a bottom, because what we can truly see is that we have this rounded bottom that was formed in silver over the last week or so in trading as it hit these lows at $14 per ounce. However, we would want to see silver close above the 50-day moving average before we could get extremely bullish in this market. If in fact we do see that occur, our next real level of resistance comes in at about $15, and that is the 0.23% retracement. Therefore, traders, the key to both gold and silver is what we see over the next couple of days and whether or not both of these markets can close above their 50-day moving averages. If they do, there could be an exceptional play from the long side in both gold and silver. We would send out a trade alert to act accordingly. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.